Well, as we head toward the weekend here, we'll take a look at your grain market activity. I'm Marlon Bowling, your tour guide to your ag commodities. And let's take a look at our corn market right now. Are we hanging on to the gains that we had early in the day? Well, as we take a closer look, we zoom in on the September contract in Chicago. You know, we're actually firming up a little bit from where we were last hour. We are now showing a trade of $3.70 per bushel. That's up 3 3/4 cents. And we have the December new crop corn now at $3.85, and that is now 3 3/4 higher. Now, the soybean trade, that has had a wild journey here today. We've been higher and lower by quite a bit. Let's take a look here. We have September beans now at 8.87 3/4. It's back up to 3/4 higher. It's actually within about 2 cents of its high of the day, but it has been as low as 8.73 1/4. So, as I mentioned, kind of a wild ride on both sides here. November now a half higher at 8.98. It got as high as $9.25, so it did breach that $9 mark momentarily today. Wheat trade, well, we have Chicago September now down 3/4 at 5.59 3/4. But hold the phone, the Kansas City and Minneapolis trade is trading a little differently today. We have September 2 1/4 higher at 5.71 1/2 per bushel. And in Minneapolis, you have that September contract now 4 higher at 6.14 1/2, kind of in the middle of its trading range today. Cotton market today, it's kind of taking it on the chin here. We have the December contract down 177 points at 87.06 cents per pound after posting a high of 89.11. So that's over a 200-point turnaround in that cotton market. Let's go to Chicago and talk with Scott Gecas of Longleaf Trading. He joins us right now. And Scott, an eventful Friday here. It's giving people a lot of head fakes out there in the grain trade this week.
Yeah, it's surprising because you are seeing a little bit of movement, but there's no volume. It's really slow here. You had a lot of headline news come out yesterday. One of the things I want to point out specifically in the soybeans is China only booked about 30% of their needs for soybeans so far. So we're expecting them to pick up those U.S. soybeans here in the next fourth quarter here. So we're going to see how that is actually going to really play out. But they're about 12 million short of their needs. So traders here are expecting something positive to come out of NAFTA because the trade wars are escalating a little bit out of control here with China. So any positive news coming out of NAFTA, I think you're going to get a big lift in all the prices.
I did notice, you mentioned the export sales report. I did notice that on the soybeans, I think we had Pakistan in there again as one of the key buyers. And obviously, to get a number that high on the weekly total, there has to be a lot of smaller amounts accumulated during the week. And there's a lot of suspicion out there that some of these smaller countries are buying up some soybeans kind of under the radar and funneling them over to China that way. What's the trade talk regarding that anyway?
Yeah, I mean, until you get some positive news or some definitive news that people are doing that, right now it's just all rumors, so we're going to see how that's really going to play out. But that is a great point to bring up.
Okay. I want to pause for a quick little break here, Scott, and if you don't mind, I want to bring you back here and talk about this livestock trade. Big moves in the livestock trade here as we wrap up the week. I want to find out why when we come back. We're talking with Scott Gecas. Don't go anywhere. We'll be right back. Let's go back to our discussion with Scott Gecas of Longleaf Trading in Chicago, and let's talk about livestock. What do you say? Scott, big moves I mentioned before the break in our livestock trade. Let's go ahead and take a look at our live cattle futures as they are trading on the floor right behind you there. August, of course, goes into delivery mode on Monday, so its hours are limited here, but we have August up $1.65. However, you have October, which is going to be taking over that leadership role, basically. It's up $1.93 right now at 111.88 per hundredweight. That would be almost $2.40 off of its earlier low this morning. Big surge taking place in the cattle as we get toward the weekend. We have December up $1.43 at 115.25. Let's take a look at feeder cattle too while we're at it here. On the feeders, we have the September contract up $1.48 now at 152.83, and there again, that's over $2 off of our earlier low this morning. October up $1.30 now at 152.90. Scott, my question to you is, what got into the cattle market all of a sudden as we get into the weekend there? It had been dragging its feet, but all of a sudden there's all kinds of buying enthusiasm.
Yeah, it's really surprising too, because for the last few weeks, everyone was worried about just huge supply concerns just across the whole protein complex. So now you're seeing the consumer demand is absolutely picking up. It's much stronger than anticipated. That's one of the reasons why you've seen that big move higher in cattle. Now, one of the things I wanted to point out is the option volatility in the cattle market absolutely collapsed. It came in almost a full point from this morning's open. That's pretty significant with this big move higher. So we're going to see how this is going to really show up and play out next week.
Now, in the lean hog trade, I want to take a look at this as well. Not to be outdone by the cattle market here, we have the lean hogs on the October contract up $1.33 at $50.98, and we have December up $1.14 at $46.32. I notice on the October we're actually showing a high of $52.15. That would have been over $1 above where we are now. I was getting up there in kind of rarefied air this morning. Is it finally getting some traction at these contract lows?
Yeah, it looks to be that way. The export sales came out a little bit higher than expected. Production was up about 8% versus last year, but with that wide basis, it's expecting to attract, a little bit more consumer demand. That's another reason why you're seeing that higher. It's also following the cattle market as well.
So are you getting maybe a little more confident that we're either at or close to the lows, that they may be behind us?
I think so. Going into the next quarter here, I think you're starting to see a little bit of consumer demand actually pick up. So that's one of the reasons why you're looking for that move higher. Now, we're also seeing that put-call ratio flip from put side to the call side, where now the risk is definitely to the upside. And if anything positive comes out of NAFTA, you're going to see both those markets run all the way up.
That's interesting. Now, looking at the pork cutout values that came out a short time ago here from the Newswire here, let's take a look at our pork carcass cutout values. They were down 41 cents, but the bellies down 4.66 today, and that's very interesting at a time when we have the futures surging ahead. So we'll keep an eye on that. Thanks for all the information, Scott. Great stuff. I appreciate it. Scott Gecas of Longleaf Trading. He is right there in Chicago where it's all happening, Christina. So an interesting perspective right from the floor.
Absolutely. Got a couple hours left to trade as well. All right. Thank you so much, Markets Editor Marlon Bowling.